Welcome back. This morning, U.S. durable goods were reported essentially unchanged from the prior month's report, falling short of the estimate of 0.6%. Durable goods are those that typically have a lifespan of at least 3 years, includes computer equipment, industrial machinery, planes, trains, automobiles, things of that nature. It's considered to be a pretty strong indicator of the overall economy. With that said, we can see here U.S. durable goods has enjoyed over the past several months a steady trend to the upside. Today's number is a little bit of a flat spot, but a flat spot could very easily continue in the same direction of the overall trend. Compare that to the University of Michigan confidence numbers, which have moved to the downside over the same period of time, while the PCE, personal consumption expenditure, that's an inflationary number, that has trended very steadily to the upside during the same period of time. Now, with that said, specifically, we can take a look at the U.S. durable good numbers. This month's report, 273, 476, represents just a very slight decline from the prior month's report, but overall does represent almost the highest high over the past 10 months or so. At the same period of time, the University of Michigan confidence numbers last were released at a level of 50. That represents the lowest number we've seen over the past 10 months, while the PCE, personal consumption expenditure, registered last report the highest number we've seen over the past 10 months. Those two numbers, the Michigan and PCE numbers, are expected at the end of this week. With that said, we consider the U.S. durable goods has a 96% correlation to the PCE. When durable goods goes up, so does the inflation numbers. Compare that to the University of Michigan confidence numbers, which has an 83% negative correlation. When durable goods goes up, at least as of late, University of Michigan numbers have gone down. We take a closer look at this, and we can see here that durable goods, again, has registered just a very slight decline. We put all the reports together over the past, these are the July reports. The July economic reports have actually registered so far as they're being released a pretty significant decline. Actually the most significant decline we've seen over the past, more than a year and a half. Now, of course, the majority of that weakness can be attributed to the Philly manufacturing outlook, as well as the New York Empire manufacturing numbers. While the rest of the reports eventually will be released, maybe this negative number will soften quite a bit, but we can see here that the manufacturing sector, not inflation, seems to represent, some of the weaker parts of the economy, even more so than housing, which is not nearly the strongest sector either. Now, taking a look at durable goods, compare that to the PCE, personal consumption expenditure. Again, a very strong correlation. When one goes up, so does the other. However, compare that to University of Michigan, and it's the opposite correlation here. U.S. durable goods have gone up over the past 10 months, while University of Michigan numbers, in fact, have gone down. So we'll see at the end of the week if this continues to hold true. Last but not least, though, consider the overall picture of the economy. We have 3 different lines here, each represent an index. This is one of our own proprietary indicators, but it represents an index of several different economic reports. So, for example, the green line represents our growth index. That's comprised of retail sales, industrial production, capacity utilization, non-farm payrolls, durable goods, today's number, business inventories, and manufacturing inventories. We see that green line is nearly near the high, so it's still quite strong. Whereas the red line, the inflation index, which is comprised of the CPI, PPI, and the PCE, which are expecting later on this week, that has begun to retreat to the downside. And of course, the blue line is the housing market index, which is comprised of several different economic reports that speak to the housing market. Now, the yellow line, of course, is the S&P 500. So with that said, we can see that going back to the recession of 2008, all three lines moved very much to the downside: inflation, growth, and housing. I think we can really classify that as a full-blown recession when housing, inflation, and growth all decline. Since then, we have seen contractions from time to time in growth and inflation, the green line and the red line, even as recently as 2020. However, the housing market was a little bit more resilient. The housing index and the housing sector is a much more slower moving market. That only really declines to the extent that it did in 2008, I think, if we're in a full-blown recession. So far, those numbers have been resilient, not as strong as they've been earlier, but still resilient compared to 2008. So it'll be interesting to see towards the end of the week if the PCE, if that does register, a disappointment, for example, we may see this red line continue lower. Conversely, if inflation reverses back to the upside, then we could see that red index line move to the upside. Keep in mind, again, today's durable good orders were flat, and that has a very strong correlation with the inflation numbers. So it'll be interesting to see if the inflation numbers starting at the end of this week are also reported flat or close to that. We hope this has been helpful. We'll see you again soon.